Hello guys. Welcome to a new video at Easy Trading channel. Today, I will show you a great strategy to hunt trends. Please, if you like the video, don't forget to subscribe to the channel. These are the indicators that we will use in the strategy: 200 period exponential moving average, 50 period Hull exponential moving average, normalized smooth MACD. These are the settings for the indicators. 200 period exponential moving average tell us which is the long-term trend. If price is above the 200 period EMA, the trend is bullish, and if price is below, the trend is bearish. We only trade in the direction of this EMA. The Hull moving average, HMA, attempts to remove lag in its entirety, while simultaneously improving upon smoothing. The crosses between the price and the HMA will give us the main entry signal. We only have to change the period settings to 50. This signal will have to be confirmed later with the other indicators. Normalized smooth MACD, NSM, by Dreadblitz. This is a MACD normalized with its highest and lowest values over the last normalization period. We only have to change the smoothing and normalization periods to 30. Now, let's see the rules for a long position. First, price must be above the 200 period exponential moving average. Second, we wait for a whole candle, at least open and close, above the Hull moving average. Third, the slope of the Hull moving average must be positive. Fourth, the normalized smooth MACD must be green. Finally, we place a buy order at the close of the candle. Then, we place a stop-loss order at the Hull moving average. The take-profit order will be set at 3 times the risk. The rules for a short position are the opposite. First, price must be below the 200 period exponential moving average. Second, we wait for a whole candle, at least open and close, below the Hull moving average. Third, the slope of the Hull moving average must be negative. Fourth, the normalized smooth MACD must be red. Finally, we place a sell order at the close of the candle. Then, we place a stop-loss order at the Hull moving average. The take-profit order will be set at 3 times the risk. Now let's make a backtest to this strategy. We will test it with the euro-dollar pair, in a 4-hour time frame, and we will do it for 20 trades. Remember that you must test the strategy at least 100 trades before playing with real money. At the end of the video I'll show you the results of the backtest. These are the results of the backtest. The strategy has been tested on the Forex market and on the euro-dollar pair. The time frame is 4 hours and the risk per trade is 2%. The win rate is 70% and the maximum drawdown is 2%. We get a gain on account of 100%. That's all guys, I hope you liked the video. If so, please don't forget to subscribe to the channel. See you soon.